Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on candlesticks patterns. I'm going to give you kind of a high-level overview of candlesticks patterns, what some of them look like. I'm not going to go into all the patterns because there are a ton of patterns, but I'm kind of going to go in and give you some of the basic ones, show you maybe some of the more advanced ones as well. But if you need more training, I highly encourage you to go over to our website over at bullishbears.com. The link will be below, and you'll see we have a whole free courses section right over here, and we have a candlesticks course and an advanced candlesticks course over in here. So we really go into depth into the most popular candlesticks patterns, and then in our ebook we actually teach you how to trade them with entries and stop levels, as well as if you become a member of our community, we have videos that teach you how to trade the most popular candlesticks patterns. So this video is going to be more of like an overview for you to show you several of these patterns, what they look like and the importance of them, because with trading, the most important thing is candlesticks, right? Candlesticks pretty much tell the story of the bulls and the bears. Now, the battle of the bulls and the bears tells a very important story of support and resistance, right? So if you're new to trading, you may have probably maybe heard of the terms support and resistance before, or maybe you've heard it put like buy low, sell high, right? So if you want to buy a stock and you're bullish or you want to go long on it, you want to buy it obviously low and sell when a stock hits its peaks, so buy low and sell high. But many a times traders will come into the market, they don't understand support and resistance, and many of times traders, especially new traders, will come in and they'll buy high and they end up selling low for a loss because they're buying on hype when the news is already kind of catching in on the stock and the stock starts reaching peak levels, and they start to buy at peak levels, and then the stock drops and they wonder why they lose their money. See, there's no way to predict 100% what a stock's going to do, right? It would be nice, everybody would be millionaires if everybody knows what the stock market's going to do. However, when somebody buys, anytime someone buys or sells a stock, it leaves powerful clues, and those clues form candlesticks. And candlesticks, again, tell a very powerful story between the bulls and the bears. Now, those candlesticks form support and resistance levels, which helps you to be able to trade in probabilities, right? So you'll never be able to predict 100% what a stock's going to do, but these patterns, which leave these important support and resistance levels, give you clues on where to enter and exit a trade, and they help you to manage your risk, right? So it's all about, support, resistance, and managing your risk, and accepting the fact that since you can't predict what a stock's going to do, there are going to be times that you're going to take losses. All the best traders in the world still lose anywhere from 30 to 40% of the time, but the reason why they're successful traders is they know how to manage their risk. They're buying low and then selling high. Or if they're going short, the opposite side of the position, they're selling high at resistance levels and they're buying low at support levels to cover their position, right? But the thing I really want to draw your attention to is that these candlesticks, they just really help you to be able to, with your trading style. Again, there's line charts, there's bar charts, but candlesticks, they kind of bring everything more together. And, each candlestick tells a story. Many of them have like 1 and 2 candlestick patterns. They can move into 3 candlesticks patterns together, like reversal patterns. And then there's bigger overall patterns that these candles all kind of fit into a bigger narrative or a bigger picture, right? So let's start, and I'll show you some of the basic ones. And you'll see right here, bullish candlestick. Now, bullish candlesticks, you can change your colors on your charts to whatever you would like, but bullish candlesticks are typically, the most common colors are green and white, right? I personally like to have green on my charts. I like more vibrant colors. You know, bearish candlestick. So you'll see right over here, a green candlestick. This is a bigger candlestick right here. This is a bullish candlestick. You'll also see smaller ones like this over here. That's a doji candlestick. Signs of indecision. But you'll see right here, green is bullish. Red over here, you'll see bearish candlesticks, right? So the battle of the bulls and the bears. Stock is falling. You'll see right here, stock fell right down over here. These red candlesticks, these are bearish, means the stock is falling. And over here, the buyers decided to come back in, the bulls, and say, nope, let's stop this from falling and let's try to push it back up. So you'll see bulls over here, bears over here. Now you'll see up top here, I'll draw or a circle up here. This right here is basically it's a combination. Now here's times that, you know, that this could be, you know, not all patterns are not going to be always the same, right? So this could be a high wave candle or, you know, a spinning top. So again, many times, you know, we tell people don't, especially in our courses, don't get bogged down in the minutia of, you know, these candlesticks. Sometimes they're not going to be perfect, right? It's not always going to be perfect when you're trading. But this right here is telling you, look at Facebook. Super overbought, way overextended at levels, if you can see right here, of all-time highs, right? So the thing to remember is a stock is not going to just go up forever, right? People want to take profits. So support resistance. They want to buy low and they want to sell high. So you're going to sell at peak levels, right? But what happens is many new traders will come in on a stock, let's say like Facebook. Facebook will have been running for a while. It'll be at all-time highs, and some news person might be talking about, oh, Facebook is doing amazing. So, you know, many new traders will be like, all right, let me go and buy Facebook right now. I have some extra money. Let me buy Facebook. And then they wonder why Facebook just dropped huge right here. Now, again, news affects a lot of things, but sometimes, again, you'll get this heads up before the news actually happens. So the news might happen right here, the negative news, to make this fall, but you have warning signs and candlesticks ahead of time to say, hey, this is at a peak level. Here's a spinning top or a high wave-ish candle up here. Be careful, the stock is going to potentially fall. It's a bit overextended, and boom, it falls. And then new traders will be like, oh my God, I lost my money. Why did that happen? Well, it warned you. It warned you up over here if you learn candlesticks. Again, so important. Again, if you're new, just take our courses, right? We have our courses, our ebook. We really go through these patterns more in depth. But again, let's show you some more, right? So you see bulls and bears, bullish candlesticks, bearish candlestick. Now you can see over here a bull flag. So price goes up and then it consolidates and kind of pulls back to the moving average lines. So you'll see you can kind of draw lines and be like this, right? So you can see kind of a flag, right? So stock goes up, consolidates, and pulls back. Again, if you want to know how to trade these, just take our courses. We teach you in our course, in our ebook, how to do that. So that's a bull flag, right? So stock goes up, pulls back, and consolidates. Over here, you'll see a bear flag. Stock is falling down, and then you can kind of just draw your lines like over in here, and you will see a bear flag. So stock's falling off or selling off, moving back to the moving average line. So that's a bear flag. So bullish candlesticks over here. The green is the bullish, red is the bearish. Green candlestick, stock moves up, pulling back and consolidating to the moving average lines. That's your bull flag. Red candlesticks down, some green ones moving it back to the moving average lines. That's your bear flag, right? So bull flags and bear flags come in so many different shapes and forms. They're not always going to be perfect. Sometimes you'll have to ad lib, and some of them will be, you know, kind of messier. Sometimes they'll go up and they'll go diagonally. You'll see here's another kind of bull flag here. Stock goes up, pulls back over in here. And, you know, so again, sometimes they kind of trade up sideways, like kind of like or right over in here. So kind of a flag pull up, and then it's kind of going up like this, right? So you'll see the flag. Basically, think of a flag flying in the wind, right? It's kind of going up like this, right? So flag flying up in the wind. So again, bull flag can go up and pull back down, or it can kind of go up and fly in the wind, right? But don't bog yourself down. Again, there's so many different ways to look at these patterns. Again, moving average lines, RSI, MACD, TTM squeeze, whatever indicator you want to use. All of those are like add-ons, and many of them are lagging indicators. Candlesticks are most important. So this is where I really want to drum this message and make it really stick with you, because there's so many, especially when you get new, everybody's like, let me throw all of these, indicators onto my charts. The thing is if you don't know candlesticks first, those moving average lines, those other indicators they don't matter, right? So it's nice to have them. Moving average lines give you a nice, they plot areas of support and resistance, so that when you're looking at candlesticks, it can kind of give you a gauge of more of where support and resistance levels are. But it's so important to know these patterns first. And this is what I also want to tell you too, especially if you're watching this, you might be like, oh man, this is really confusing. Well, yeah, it is. It's we try to teach people that, trading, you want to treat it like a profession, right? This is a skill set. If you learn the skill set of trading, this is a skill set you're going to have for life, right? It's always going to be a battle of the bulls and the bears. It's always going to be about support and resistance. So with trading and stuff, technology keeps getting better and better and enabling us to be able to, trade from home and using technology and all of that. So the technology is probably just going to keep getting better and better over the years. But the thing is, what's not going to change is support and resistance and patterns, right? Maybe something will come out newer than candlesticks someday. Who knows? But at the end of the day, it's still going to, whatever it is, it's still going to map out support and resistance, which is so incredibly important. So you're going to have to study. It's going to take a while. We don't like to sugarcoat things. It could take you, months, if not a year plus, to have these patterns really jump out at you. And that's why you want to study them. Again, take our courses, read our ebook, watch how we teach you in our courses in our ebook. We have the wallpaper backgrounds you'll see on my computer right over here. This is one of our wallpaper backgrounds. And this is just a few of the patterns to look at when trading, right? So we provide those wallpaper backgrounds in our candlesticks course. So in our candlesticks ebooks, right? So you can subscribe and gain access to those. So bullish, bearish, bull flag, bear flag. Up here, you're going to see again that high wave-ish candle or a spinning top. So it's kind of both. You can say, which one is it? Well, does it really matter? Again, it's overextended. It's warning you that traders might be taking profit and this thing might fall. And this kind of doji candle ahead of time, or spinning top ahead of time, was warning you that that was potentially going to happen. So when you see a stock overextended like this and you see this, be aware of a possible fall down. If you see this as a stock, is falling right down in, let's say, this area, be aware of possibly the bulls coming back in, trying to stop it from falling and push it back up. You'll see right over here, this is kind of a hanging man candle, or also an inverted hammer. Hanging man candles or inverted hammers are very similar. They look the same, but they tell a different story. So, an inverted hammer as a stock's falling is basically saying, hey, bulls are trying to stop it from falling. But as it's going up to the moving average lines, if you see it where these moving average lines are resistance, then it becomes a hanging man. So, hey, indecision, price can't get above the moving average lines, hanging man falls right down here. You'll see right over here, market's open right now, and you'll see this candlestick starting to form right now. The day hasn't finished yet, and this is on Facebook, and you'll see right now it's showing a possible hammer, showing like it might be holding support. So this is where, as Facebook is falling right over here, the bear or the bulls might be coming in and trying to hammer out support and hold a base, right? If this base holds, then this might turn into a double bottom. So a bottom here, and then you'll see price might be starting to reverse. It does not mean if the bulls come back in here that Facebook is going to go all the way back up and get above $218 again. It's got a lot of resistance ahead, but that's where you want to see these patterns. And these patterns are a lot more reliable on the bigger name stock. But patterns matter in all, types of stocks, whether it's low cap, medium cap, high cap stocks, low float, high float, medium float. It doesn't matter. Patterns matter everywhere, right? All types of patterns matter. They tell a very, very important story. So these are just some of the ones that we're looking at here on Facebook. I'll show you some more examples as well. Let's take a look at Amazon. I just find, or you'll find, that on the bigger name stocks, they tend to be, again, much more reliable than on, the small cap stocks, because small cap stocks tend to pump and dump a lot more. So you still want to find the patterns, again, and all levels, right? Weekly, monthly, daily, hourly, 5 minute, 1 minute. It all depends what type of trader you are. You want to see these patterns really on all, depending what your trading is. They all matter in all time frames. Let's put it that way, right? So let's look at Amazon here. You'll see the stock has a big gap right here. There's a hole. If you look right here, right in here, you'll see a gap, right? So the stock must have had good news here. You'll see lots of volume coming in here. Gapped up, so Amazon gapped up really big that day. You'll see a big gap. Now there's a saying that says all gaps must be filled. So eventually, it doesn't mean it's going to happen right away. Eventually, as the stock goes up, at some day it may want to come back down and retest, and many a times fill that gap. So you have to be very aware. It could take months, if not years, depending on the stock. But at some point, the stock might want to come down and retest those areas. So right here, this is an example of a gap up. Now the opposite is also true. There's also times where there are gap downs as well. So as the stock falls and gaps down, it might want to go back and fill that gap, right? So be very aware of gaps, because they tell a very powerful story of where a stock might potentially go. So let's remove those lines right here, and I will show you guys right over here. You'll see an ascending triangle, and what you'll see is kind of a flat top right over here. You'll see a stock. This stock has Amazon's hit a peak here several different times, so it's creating a flat top, right? And then you'll see, if you go over in here and take this line right here and draw your trend lines, kind of higher lows being formed with a flat top. Now you can see basically an ascending triangle, right? Again, we teach you how to trade these patterns in our ebook, and if you become a member, we have videos on how to do that in our ebook. So that's an ascending triangle. Right over here, what I was showing you or said to you earlier, an inverted hammer. Amazon was falling, and you'll see this inverted hammer now at a base. So it's trying to hammer out a base. It's kind of, again, it's weird. It's an inverted hammer, not a hammer, but you'll see bears are trying to push it down. Bulls came back in and held it, and you'll see that it held support. This is also tweezer bottoms, where you'll see that these bottoms are equal. That's another possible reversal pattern, is it's falling to equal bottoms, tweezer bottoms reversal on the way back up. You'll see dojis over here, very popular or very common pattern. You'll see them green, red. They're basically indecision candles. So you'll see them in all different shapes and sizes. Some people call dojis, or spinning tops if they have a bigger body, like up in here, or up in like in here. Sometimes like these dojis, again, there's gravestone dojis, there's long-tailed doji or long-legged dojis, there's dragonfly dojis. There's so many dojis. Don't bog yourself down. Good dojis tell a very powerful, like kind of basically they're indecision candles, right? But then there's gravestone dojis, where you'll see like this, if you see this right up here, a gravestone doji, when it's, a stock is overextended, be careful, because you'll see something like this. It's a longer wick up top and a shorter, smaller real body. This is saying be careful of possible reversal, and you'll see, boom, price falls. So this is an example of a gravestone doji, right? So go over in here and you will see, here's a bigger pattern, right? So this is a cup and a handle. So you'll start to see now bigger patterns start to form. So you'll see a cup, right? A kind of a U base, and the stock kind of pulls back and forms a handle. Now again, not all cup and handles are going to be perfect. Some of them look very, very different, right? So you're just going to start to eyeball these things, and you'll see, okay, cup, handle, pull back right over here. You'll see, I see kind of another one in here, right over in, where did I just see it here? Where was it? Kind of right in here. You can see kind of a U bottom here, and the stock pulled back over here. So another kind of choppier cup and handle, right? You can kind of see kind of a handle right in here, or back right in here. Again, not going to be perfect. U, kind of a handle, and then it kind of went up from there, right? So again, don't bog yourself down and say, oh my gosh, the pattern's not perfect. Well, not all patterns are going to be perfect, right? You'll see up here, here's a bearish engulfing. So stock goes up and you'll see a smaller candle that this big red candle is engulfing it. So price goes up, bearish engulfing, stock falls. You could also see it's kind of tweezer tops, two equal tops. So price goes up, boom, price falls down. Again, candlesticks tell you stories. If you're new and this is confusing you, you're going to have to give yourself time. We like to set the proper expectation with people to tell them, we all want to make money in the stock market, right? Everybody wants to make money. Everybody wants to get rich quick, but it's not possible. Like you might be a phenom and you might get in the stock market and maybe you get lucky and it all comes easy to you. But to most people, it doesn't. Most people, it takes time, right? You can be a one-hit wonder and make money, and get lucky, but eventually luck runs out if you don't know these candlestick patterns. Again, I'm just showing you a few of these. There are so many different candlestick patterns. So this is a bearish engulfing. This red candle is enveloping the small green one as the stock is overextending, saying, watch out for a possible reversal. And what did it do? It reversed, right? Again, you don't know what a stock is going to do. However, these candlesticks tell you stories of what might happen and show you probabilities. Evening star pattern, very, very popular pattern. Stock goes up, kind of a green bullish candlestick with a doji spinning top, and you'll see these. Then the next candlestick right here, this third one, is a red confirmation of this thing's reversing, and it fell right down to the moving average lines. But it gave you a warning when you see this green candlestick here with this doji up here. That's a star pattern. So the evening star is confirmed with this third candle. So right here was the warning, that red candle, that doji candle. The third one came down was confirmation of that evening star pattern. Same thing over here, but at reverse is the morning star. So evening star is like good night, see you later. Morning star is like good morning, let's wake up, let's start our day, and let's reverse it. So price is falling, kind of a star, or this is kind of a long-legged doji or a doji candle. It's a little bit crazy right here, but it's showing you price is falling and possible reversal. And you see this third candle right here, this green one, confirms the reversal, and it continued up. So evening star, morning star. Now spinning top, again, these candles right here, these smaller ones up in here, they also can be dojis as well. So you can call them, it's kind of like these smaller real bodies with some wicks in the shadows. You'll see these many times at resistance and also support levels, saying, hey, be careful. There might be a shift in momentum. And you'll see right here, Amazon went up. All-time highs right up over in here, spinning top candle, but it was warning you with this other spinning top. There's like 3 of them right here. Boom, boom, boom. Warning, warning, warning. Boom. Price falls, right? So spinning tops have a little bit bigger real bodies right in here, whereas dojis have more of like, they have like more of like smaller real body, like right in here, smaller real bodies. spinning tops have a little bit bigger real bodies, right? So again, don't bog yourself down. This is still telling you the same thing. Look out, possible reversal, price is overextended. Next one over here, here's a bullish engulfing. So price starts to fall, bearish red candlestick here, and there's a bigger green candlestick that envelops over on this red candle. So this is saying, you know, possible reversal. And what did it do? It enveloped this candle, showing you a possible reversal. So that's a bullish engulfing pattern. All right. So I'll show you a few more here. We'll look at Comcast, CMCSA. Again, there are lots of patterns, but I just want to show you guys just some of the common ones. Right over here, you will see, let's start off with a head and shoulders, but we'll go into this right here, Comcast. See this big, crazy looking, ugly green candle? It's got a bigger real body and this long wicks and shadows right here. These are nasty, high wave candles. You can see them. They'll either be red or green sometime. This is where it just really traps you. It's just that tug of war between the bulls and the bears, and it creates a mess. And those high wave candles are very difficult to trade because these wicks and shadows are very important, you know, support and resistance levels. You'll see Comcast got at a peak right up at this time right here at 44 bucks. Now, any candles that come after that have to contend with this upper wick, which gets really nasty, right? And same thing down here with the shadows. So this crazy long wicks and shadows, this is a high wave candle. And you'll see, so right here, here's a high wave candle, but then you'll see I have an arrow pointing over here of a head and shoulders, right? If you look at this, you'll see, basically consider this a head. So picture your body, and you'll see a head up in here, and then kind of just do like a curve up in this area right here. You'll see a left shoulder, and you'll see right over here kind of a right shoulder. Again, all head and shoulders are not going to be perfect. Typically the left shoulder is higher than the right shoulder. Many times they're equal, right? So sometimes many times the head and shoulders, the right shoulder will be equal to the left shoulder, and other times you might get a quick poke on the right shoulder that breaks above the left shoulder, and that'll be a fake out. But just be aware of it, of a head, a left shoulder, and a right shoulder, head and shoulders, and then you'll find like a neckline that goes up, right? Again, we'll teach you how to trade those patterns in our ebook and our courses. So that's a head and shoulders pattern. Let's go over and flip it upside down, and you'll see an inverse head and shoulders, right? So you'll see a head down here, and you'll see a left shoulder. Just kind of put these together, right? And then you'll see a right shoulder, and then the neckline's up here. So it's an inverse head and shoulders. It's the opposite of a head and shoulders. So if you take the inverse head and shoulders and flip it upside down, you will basically see a head and shoulders. These patterns all matter. I just really want to stress that all of these patterns matter, and it takes time to learn them. I don't want to keep stressing it over and over and over, but it's that important. You know, just give yourself time. You'll see right here a symmetrical triangle. We can do this. I'll draw some lines right over here, and you'll see a symmetrical triangle. Not perfect, but you'll see kind of like these peaks and valleys come to an apex point, and a stock kind of breaks out. That's a symmetrical triangle. Usually symmetrical triangles confirm whatever trend. If a stock was going in an uptrend, typically a symmetrical triangle will confirm the uptrend. If it stock's in a downtrend, then many times it'll confirm or continuation downwards. Again, not always going to be perfect. Some patterns work better than others, but it's just very important to be aware of it. There's a symmetrical triangle. And let's go over and see here. Oh, so of course my chart got all messed up. CMCSA. And we'll kind of end with a double bottom. Price is falling down over here, and you'll see a bottom, so a support level right here, right, in kind of confirmation right over in here. Again, not always going to be perfect. Doesn't have to be completely equal, but buyers came in down over in here. Over in here, you can see a double bottom pattern, and again, price broke out right over in here as it broke out of the double bottom. When a stock breaks out of a resistance level, that resistance level then becomes support. So again, if a stock is having a tough time breaking resistance, once it does, many times it'll come down and retest it, and you want to see that area hold support. If it falls and if it doesn't hold support, then it becomes resistance again. Everything is all about support and resistance.